Hello everybody, this is Books of the Stock Market. How's everyone doing? As for me, I'm doing fine. It's getting a bit busy at work. I think the months of June and July are when the company I am at is at its busiest. Other than that, I'm still running in the mornings for most of the week since it's pretty hot in the afternoon. With that out of the way, let's get into this week's video. In this week's video, we'll be going over the Rational Roots model. So I was going through some models last week due to Bitcoin dropping a ton, and I stumbled upon Rational Roots' Twitter account. He posts models that are based on the two past Bitcoin bull cycles, and looking at his drawings really helped me understand a little bit more. Also, unlike other models out there, he does provide an estimation of when the bull cycle will peak. Since it was pretty interesting, I thought I might as well study it a little more and share it with everyone. Before we do that, let's do a little portfolio update. Currently, all cryptos are down due to Elon's tweet about breaking up with Bitcoin. I don't know what's going on with Elon, but he seems to like the attention. Anyways, I believe that Bitcoin will shrug this off, and as Elon continues to tweet weird stuff about Bitcoin will start to care less about Elon's tweet. As for Bitcoin itself, we see that Bitcoin is trading at the $37,000 range. Before Elon's tweet, we were testing the $40,000 resistance level. I think Elon must have known we were testing an important resistance level before trolling everybody. For me, however, you can see that I'm still down around 25% off this trade. As for my other Bitcoin position, we see that we're down around $2,300. I think this was an improvement since not so long ago we were close to $2,700 in losses. Although it will take some time when compared to my other crypto positions, I firmly believe that eventually this trade will become profitable. Like Bitcoin, we saw Ethereum also fall. We're currently at the $2,700 range, and before Elon's tweet we were around the $2,900 range. Ethereum seems to be mimicking Bitcoin's price very closely as the graphs are almost identical. I think this is good for Ethereum as it is trading like an established coin like Bitcoin and not other less established altcoins. As for Litecoin, we see that it also fell like the other two cryptos. We are currently at the $180 level. Before Elon's tweet, we saw Litecoin hit $195. Like Ethereum, Litecoin is also looking very similar to Bitcoin. I think this is due to Litecoin being a dead project, so it's just mimicking Bitcoin's price action. So yeah, there's not much to say as everything was affected by Elon's tweet equally. Moving on from a portfolio update, let's look at this image. This is the model that the Rational Root is working with. Like other models, the Rational Root is comparing the two previous bull cycles. The one in yellow is the 2013's bull cycle run. The one in orange is 2017's bull cycle run. And finally, the red is this year's bull cycle run. Also, from this graph, it looks like he defines the bull cycle phase when there's a 100% recovery of the all-time high. I think that's how he defines it because it looks like after day 1, we see spikes above a certain consolidation level. Usually there's a lot of consolidation around the peak of the previous bull cycle's all-time high. Also, on this graph, it looks like he drew some line indicating the peak of the bull cycle phase. So far, there's nothing special about this model because most models online do the same thing, such as lining up the previous two bull cycle phases and indicating the peak is somewhere in September. But what caught my eye was this graph. As you can see, he just did a small adjustment due to the drop we saw recently. If you forgot what caused the huge drop a few weeks ago, I have a previous video that I made explaining why Bitcoin dropped. Anyways, to explain very briefly, we saw Bitcoin drop due to China limiting Bitcoin mining and publicly stating that they do not encourage its citizens to use Bitcoin. Many people were able to rationalize this move as China wanting to kill the digital yuan's competition. Unfortunately, prices acted violently and we saw Bitcoin drop a lot. Also, at this time, Bitcoin was already stressed due to Elon saying that they're stopping vehicle purchases using Bitcoin due to environmental concerns. Since there was a lot of FUD at this time, we saw Bitcoin make an unexpected drop. This unexpected drop was calculated in the Rational Roots model. We were expecting a drop to come at around day 141 as the previous two cycles showed some sort of drop. However, for this cycle, some people say that we did not see this huge correction. Therefore, the Rational Root calculated the difference between when this year's drop occurred and when the other two previous cycles' drops occurred. After that, the Rational Root added that difference to the all-time highs of the previous cycle, and that gave us a new date of December 6th. However, whether this is valid or not really depends on two things. First, we see this little dip happen around day 151. This dip is pretty comparable to 2017's and 2013's dip. Furthermore, this happened around the time when the two dips occurred in the previous two cycles. I mean, the dips occurred around day 141 for both cycles and a 10-day delay doesn't seem so bad. Therefore, if this area was truly a dip, then this year's bull cycle may be a bit different from the others. Second, we need to see a somewhat sharp recovery to the $50,000 mark. Why does this have to happen? Well, if we look at 2013's dip, we see that once we dipped, we recovered pretty quickly. Likewise, 2017's dip shows something similar. Therefore, if history were to repeat itself, we should see some sort of V-shaped recovery to $50,000. However, like we all know, we are still lingering around the high $30,000 range. Therefore, in the next couple of days, we need to see some sort of spike in price towards the $50,000 mark. The rational root also understands the second point, as he did post another graph that tries to demonstrate how fast we need to reach the $50,000 mark so that we don't break the 4-year model. Here, we see how many days it takes to make a new all-time high. Let's look at 2013, which can be considered the most volatile of the 3 cycles. We see that it took around 197 days to make and break the previous all-time high. Also, if we ignore that huge peak, since it's a bit of an anomaly, and look at this peak, it seems to line up more perfectly with the other 2 cycles. For the second peak, we see that it took 174 days to make a new all-time high. If we fast forward to 2017, we see that it only took 55 days to make an all-time high. Currently, we seem to be approaching 61 days and 30 days. This makes sense since if we look at this image again, the pink line seems to be in between the orange and yellow line. Therefore, we should see a consolidation period that is longer than 2017, but shorter than 2013's consolidation period, as this year's bull cycle phase seems to be a mixture of the two. So yeah, I suggest that everyone take a look at his Twitter account for some insight on where Bitcoin would be going. As for where Bitcoin is at right now, we see that it's consolidating around the $38,000 level as shown in this orange line. As for the price range, we seem to be bouncing between the $35,000 level and the $40,000 level. Other than that, we see a symmetrical triangle forming. We are 3/4 of the way through the triangle, which means a breakout will happen soon. Symmetrical triangles sometimes break out far in the current trend, and since we're in a downtrend for now, we may see another drop. However, most of the time, symmetrical triangles just indicate a breakout will happen and not the direction of the breakout. If you break towards the downside, I'll be kind of scared since Bitcoin is acting really strange, but even if it's strange, I'll still probably buy the dip. But for now, all we can do is wait and hope the breakout is towards the upside. Well, that's it for me. If you liked this video, press the like button. If you have any questions about this video, leave a comment below. If you want to watch more videos like this, press the subscribe button. This is Books of the Stock Market, and I'll see everyone next week. Thanks.